Hello everyone, welcome and thank you for joining us today. Today we're talking about the value of financial advisors with First Bank Wealth Management. First Bank Wealth Management, our goal is to help you sleep better so you can dream bigger. I will be your presenter today. My name is David Frederick. I'm the Director of Client Success and Advice with First Bank Wealth Management. I provide wealth planning advice, estate planning, tax mitigation, business succession advice. I'm always trying to provide advice so that my clients know that their assets are well protected and that they're in good hands. Really quickly, let me give a disclaimer today. The opinions expressed in this presentation are the statements of the speaker's opinions, are intended only for informational purposes and are not necessarily the opinions of First Bank. Everything you hear me say is my own opinion and my own perspective only. So today we're going to be talking about the value of financial advisors, especially in the current economic and investment climate and landscape. Now, as anybody who's paying attention to the news knows, we're in a strange position economically. Rising inflation has reached the level of the highest it's been in 40 years. Over the course of the past 2 months, the stock market has been steadily sinking. There are apparently some looming tax changes that may be coming down from the federal government. And as we've been watching the war between Russia and Ukraine unfold, we see that international conflicts are starting to have an impact on finance, investments, and the economy. This is the kind of time when a professional financial advisor can be extremely valuable to investors, to people who are concerned about their assets and how they may grow and thrive in an economy such as this. But as I talk about the value of financial advisors, this does beg the upfront question of financial advisors are valuable compared to what? So let's take a look. When we think about what we should compare financial advisors to, I like to think of things like E-Trade or Robinhood, these stock brokerage firms that allow people to buy and sell stock on their platform on their own with no substantial advice. I even think of places like Vanguard and Fidelity that may offer some advice, but really allows people to engage in management of their own assets on their platform, on their own and without substantial advice or perspectives from financial advisors. When we're thinking about financial advisors, we think about that compared to a go-it-alone. And financial advisors have a lot of things that can help people with, as they face a difficult investing landscape, so that they may actually provide value over people who are going it alone. Today we will consider the value of financial advisors from a few different perspectives. Number one, we'll consider the professional advice versus do-it-yourself investing, go-it-alone investing. We'll see just what the comparison between those two are. Number two, we'll consider some specific ways financial advisors may add value. And number three, we'll consider a quantitative consideration of actual value added. So let's jump right in. I'm going to open our conversation today with a couple of different analogies. This on your screen is the logo for Webmd. Everyone knows Webmd. It's an online medical encyclopedia that provides information about health, wellness, illnesses, maladies, diseases, injuries, and it's a resource to help people provide for their own health and wellness. This is a picture of your doctor. Actually, these are probably models dressed up like doctors because I don't know if doctors get quite this handsome. But these are actually doctors. And what's the difference between these two? Well, WebMD is this online source for basic medical information. It can provide you with the information you need to stay healthy as a general matter, and it may help you to be alerted when something is going wrong with your health or with your body. It has a valuable place in the landscape. However, your doctors can diagnose and actively treat you if you're ill and sick. They can prescribe medication. They may be able to perform surgery. They can respond to your questions in real time. They can provide you a holistic level of service on a professional level that can actually help you get better going forward. Let me give you one more analogy. This is the logo for Legalzoom, an online resource for people who want to do it-yourself legal documents like wills, rental agreements, leases, things like that. This is a picture of some lawyers. Again, I am certain these are models dressed up like lawyers because as a lawyer, I can tell you lawyers just don't get this handsome. Now, Legalzoom is an excellent online source for basic legal information. If you just need a very simple template for something that you already know how to do, paying for it on Legalzoom may in fact be worthwhile. It is a low-cost option for very low-touch, basic, low-down tasks. Now, on the other hand, your lawyers are capable of drafting highly personalized legal documents. They can argue for you and represent you in court in times of conflict. They can also answer your questions in real time. They owe you a heightened duty of the attorney-client relationship, and with them, they can provide for you more services and better perspective and advice than may otherwise be available on Legalzoom. Now, this analogy applies to investing as well. Do-it-yourself investing on E-Trade or Robinhood or Vanguard or Fidelity may be appropriate and fine for some basic tasks, but professional help becomes much more worthwhile and appropriate for complex or important tasks, especially for providing investments for things like your life savings. Now, financial advisors are capable of providing professional and objective advice in a number of different areas. This is the kind of things they do that's equivalent to doctors and lawyers just in the realm of finance. They can provide financial plans and financial planning. They can provide ideas for tax reduction and tax mitigation. They have a wide array of investment choices and can help you determine which investment choice may be best. They can also talk about risk management and making sure that you're not being too risky as you invest your life savings, your retirement account, your education fund, as you invest for your health care. All the different ways you need to invest, they can help mitigate and manage the risks that go along with it. Moreover, financial advisors may also have access to investments and products that are not always available for do-it-yourself online platforms. For instance, purchasing life insurance typically requires someone with a life insurance license to make sure that that life insurance is suitable. Also, access to investor-grade funds may not be available on all platforms, but will be available through a professional investor, professional financial advisors. They may simply have access to better accounts, better funds, and better options that are not always available everywhere. Now that we've considered the value of financial advisors generally with these opening analogies I offered, let's consider some of the more direct services that they offer that investors may not be able to get on their own. Number one, and in my opinion most importantly, is financial planning. Financial advisors typically have access to financial planning tools and softwares that investors on their own may not have access to. Financial planning may be used to plan for retirement, to plan cash flow, to plan for major purchases. What a financial plan is core of investment. It is the idea of taking your assets and matching them to your stated goals, your lifetime goals, your life goals. And with a financial advisor, they should be able to draw a line between your assets and your lifetime goals to help you achieve them. Every investment should start with a plan. The plan may be how to capitalize on specific investments, but also how those specific investments fit into a larger picture of investing through a financial plan. Financial plans are core, and they'll be the first place that a financial advisor is likely to start with you when you retain one to help with your investments. Next, financial advisors often work in the field of managing behavior. Investments are complex, and it may be hard for individuals on their own to understand what the economy, what the market, what the investment market are doing, and may succumb to emotional investing, trying to buy too high or sell too low, and will not be able to earn money off of their investments. Let's consider an example. On your screen, you should be able to see the Dow Jones Industrial Average for the past year. This is actually the real Dow Jones Industrial Average taken off of Yahoo Finance. And I encourage you as a do-it-yourself investor to look at this line and try to figure out what's going to happen next. Is it going up? Is it going down? Should you buy? Should you sell? This is a complex area of investment, and it's one that, as you look at it and you consider your own life savings on the line, it may lend itself to emotional investing. Now, let me show you what I mean by that. In this funny little cartoon, we watch as assets go up and down. The S&P 500 goes up and down over a given period of time. Now, you'll notice that it's up more than it is down. But often we'll see, if we look at these funny little thought bubbles, we see that the trend is my friend. I'm happy that it's going up. As it starts going down, this person thinks, oh, it's only temporary. As it's far down, they say, I just can't take it, I'm going to sell. So they sell at a loss. And then when it starts going back up, it's time to open the account again when the account is high. And then it goes up and down and up and down. And then now it's time to average down, and it's time to sell it all when it's all down. These kinds of emotional investing is what individual investors often follow through on. And this is counter to and opposite from prudent investing that says that we should buy low and sell high. But this is a pretty standard statement of behavioral finance and emotional investing. This is exactly the kind of behavior that professional financial advisors are trying to manage against. They help us manage our behavior because they can take emotion and guesswork out of the process, and they can replace it with data and professional perspectives. So managing behavior is one of the core offerings of a financial advisor. Also, when we talk about investments generally, financial advisors offer a lot of very high-end technical contributions to investments. Number one, for instance, is asset allocations. Investment return comes from a couple of different components. Number one is just being there. Just being in the market and allowing your assets to rise and fall with the market is a major part of getting an investment return. However, there are also incremental returns available due to proper asset allocation, as well as market timing, security selection, and lowering fees. Now, most of your portfolio return, as I said, comes from overall market movement. But when it comes to asset allocation, there is a good deal of variance available to people who know how to allocate their assets appropriately to manage their risks and potential return. A good advisor is vital to good asset allocation selection, and good asset allocation selection can actually increase overall return. Next, some financial advisors engage in security selection. Now, stock picking winners and losers stocks, is something that has gone very out of fashion in investing lately. It is considered an outdated mode of investing, and broad diversified investments have generally been accepted. However, some investment characteristics can stand out and can be shown to outperform over time. Now, financial advisors are often good at picking up on these trends through analysis, through data. They can notice when there's a pricing anomaly. They may be able to tell you that some asset or asset class is more likely to go up than down in a given period of time. They can advise you to invest in that asset or asset class, keep you informed about new ones that are discovered, and they can make sure that you exit when it looks like the ride is over. So some amount of security selection is appropriate. Also, when it comes to investments, financial advisors can help you manage costs. Most investment vehicles have fees that are built in along with other costs. Determining whether a fund's fees and costs are appropriate or if they're too high can be a big challenge for individual investors. Luckily, most financial advisors have an examination and vetting process that they can do instead of the individual investors. It's time consuming, it can be costly, but your financial advisor as a professional engages in that examination and vetting so that you don't have to. They're often in a better position to review the actual investments, make sure that they are appropriate for your financial plan, make sure that they have a chance to grow, but also that they're not going to cost too much by way of their fees and internal costs. Also, when we consider investing, financial advisors will engage in a rebalancing of the portfolio on a regular basis. Rebalancing the portfolio is crucial. They need to rebalance not just among different investment types, but also across investment types to make sure that return expectations and risk tolerances are met. Now, rebalancing is both an art and a science, and it's something that professional financial advisors engage in regularly. They want to make sure that your portfolio stays as efficient and effective and cost-effective as possible while not generating too much taxable income from the rebalancing effort. Rebalancing is one of the primary duties of a financial advisor going forward. All right, now that we've considered the analogy of financial advisors to doctors and lawyers as professional advice and professional care, and we've considered some of the services they actually provide, let's take just a moment and consider some quantitative value of financial advisors. Now, Morningstar is a financial research firm that investigates investments and the economy and how investors do overall. Morningstar had a study from 2016 that actually quantified value provided by financial advisors for people who are investing in retirement funds with a financial advisor as opposed to people who are investing with retirement funds without a financial advisor. What Morningstar discovered was that the presence of a financial advisor added approximately 1.82% of total net annual returns due to a number of specific areas: retirement withdrawal strategy, tax efficiency, total wealth allocation, and incorporating efficient guaranteed income. That just the presence of a financial advisor with retirement investing added 1.82% of net annual returns. Now, what the study further found is that 1.82% extra, when a person reached the age of retirement, would allow for up to 29% more retirement income per year based on the extra gains that financial advisors were able to create. Similarly, Vanguard, an investment firm, has been examining the topic of financial advisors for the past 20 years and accumulating a lot of data. Their report has indicated that if a financial advisor follows the best practices of wealth management, which means that they're always doing wealth management as well as possible with the best practices, then there's likely to be up to a 4% total annual return increase for those with a financial advisor versus those who do not have a financial advisor. And that 4% comes from three best practices in three general categories, and that is portfolio construction, behavioral coaching, and wealth planning and management. The value of a financial advisor, according to Morningstar and Vanguard, is up, and if it's at the very best of wealth management practices, it can be up 4% per year in total return. All right, so what does that leave us with? Now, my conclusion on this is that do-it-yourself is fine for some projects. If you know something about financial markets and you feel comfortable investing small sums of money into funds, then terrific. However, important areas of life may require professional guidance and help. When we think about investing our life savings or our retirement or our kids' education funds, then it may be appropriate to have help from professional financial advisors. In the same way, when you're facing a serious medical condition, you may need to consult with a doctor, or a serious legal condition, consult with an attorney. We've seen that professional financial advisors offer a wide array of services, including financial planning, behavioral management, as well as technical services in asset allocation and portfolio rebalancing. We've also seen that effective help from a financial advisor can increase total returns and cash flows into the future. Scientific studies have tended to indicate that they, in fact, do add extra value beyond what is capable for an individual investor on his or her own. I would encourage you to reach out to connect with a financial professional, a professional financial advisor with First Bank Wealth Management. Here, our financial advisors are dedicated to helping people sleep better so they can dream bigger. If you'd like to be put in touch with a financial advisor at First Bank Wealth Management, please send me an email at david.frederick@fbol.com. Thank you very much.